What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do macro technical analysis. We'll be looking at weekly charts of all of the indices, the VIX and Bitcoin. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Real quick, just an announcement, there will be no YouTube video updates this week. So the next video update will be on Monday, April 4th. If you're a member of the Stocks channel Discord, there will still be market updates on the Discord server, but there will be no YouTube video updates. So if you're looking for updates from me next week, you either need to be on the Discord server or you need to wait until I get back on April 4th. All right. So remember that we are looking at a weekly chart, so every candlestick does represent one entire week's worth of price action. And I want to start by looking at a zoomed out view of the market. And the first thing I want you to pay attention to is the possibility that we are still in a macro level bull market. You can see very clearly from this channel that we broke down from the bull market that we were in the last couple of years, and we came down and we finished out this stock market correction. And as long as we hold above these levels right around 41.58, which so far we did double bottom off of that level, and we start to bounce and we do get a bullish breakout in the very near future, we could see SPX breaking out to new all-time highs with that price target up there at 51.05. So that price target is still achievable over the next 12 months, and there's even the possibility we see that price target this year. But let's not look too far ahead because we still have a lot of analysis we need to look at. I just want you to pay attention to the fact that we have held up above that channel low, and so far we are getting a very impulsive bull rally off of this support. So now if we start to zoom in, you can see that we did finish out this 5 waves. We went through that correction, and so far it looks like we could have put in the bottom. We got very close to that channel low, and we did double bottom off this critical support. And remember, this critical support goes all the way back to the lows of June in 2021. So this is a very strong retracement, and this was a very deep stock market correction, and it was over the course of about 3 months or longer. And typically without an economic recession, you're only going to see a stock market correction that lasts no longer than 3 months. And so far it looks like we hit the end of that timer and we're starting to get a very impulsive bullish rally. So does this mean we're just going to bounce off the lows and go straight to all-time highs? Absolutely not. We still need to have healthy market structure, which means right now, because we're getting such a strong bullish impulse off the lows, we will be due for a pullback, and the most likely area to pull back to is going to be right around this 50 EMA on the weekly chart, and that's going to bring SPX back down to the 43.50s. Now there's nothing that says we have to go back down and test that level, but it would be a very healthy retest of the breakout. You can see right now we're testing the 20 simple moving average as weekly resistance, and if we start to break out above that level, we are going to be getting a little too overextended and due for a pullback. The higher we get extended, the more likely the pullback doesn't have to come back as deep because we will have more critical support to the downside. But from here, you can see with this strong 2-week push, it's completely possible we start to pull back from the 4500s and come back down and test around the 4350s. So don't rule out the possibility that we're due for a pullback before we can go any higher, and that will allow for everything to cool down, get a successful retest of the breakout, and then we could come back up, get the bullish breakout, and then get a healthy run to retest the previous all-time highs. So without a doubt, this is looking like bullish price action, but don't forget we did lose the bull trend. We still need to see the 5 EMA and the 13 EMA crossing back above the 20, but because it's going to take quite a while to see that happening in the moving averages, you will want to pay close attention to the price action. So look for the potential of a rejection around resistance and a retest of the breakout, and then if we can get a successful bounce and come back out and take out the highs, we will have a very high probability chance to at least retest the previous all-time highs. And on a breakout above that level, which is right around 47.82, I will be expecting to see SPX trading around 5100. So that's my macro level view of the SPX, and so far it looks like the correction is coming to a close and the bulls are taking back over control of this market. Now let's jump over to the bear bull survey, and you can see that we did have very high bearish sentiment because the week ending 2/23 we were at 1-year bearish highs with 53.7% of the people that were getting bearish. We had many weeks go by where we had over 40% of the people that were bearish, and eventually we did reach a very critical bottom in that stock market correction, and we had way too much bearish sentiment, and that's why you're seeing such an impulsive bull rally off the lows. You're getting a lot of people that are getting short squeezed and a lot of people not trusting the rally, trying to short it continually, and it just continues to go higher, squeezing them out of their positions until they become net buyers, which only helps the stock market go higher. So the good news is we are seeing less bearish sentiment, and nothing changes sentiment quicker than price. You'll notice very quickly when the price started to bounce off support, all of a sudden more people are starting to get bullish, and that's exactly what you would expect to see. The stock market moves from cycles of extreme fear to cycles of extreme greed. So now that we've had the extreme fear, it is very possible we're about to see extreme greed over the next few months. So I would expect to see this survey continue to have more bullish sentiment week after week, and right now we have that Goldilocks ratio of essentially 30% in every single camp. This is a very healthy split, and there's a very healthy dose of bullish sentiment and bearish skepticism, so that will allow this bull rally to continue on until we see way too many people getting bullish. So if we start getting way too many people getting bullish and we start to see over 50%, that could mean that we're due for a deeper pullback. Remember, this is macro level view, so nothing I'm talking about is over the course of days. All of this that I'm talking about is going to take weeks to develop. So in the longer term, it does look like we have more room to run to the upside until we see extreme greed. Now jumping over to the NDX weekly chart, you could see a very similar story as the S&P 500. We came down to a very critical level, which came all the way back down to the lows in May 2021, and we did start to break out of the lower channel. If I zoom out, you could see how bullish this channel is, and it did look like the NDX was starting to break down and we were going to lose the macro level bull market. But so far, it's starting to look like that was a false breakdown below support, retesting the lows from May 2021, and now we're back into the channel with two very impulsive bullish price action weeks. So with this week's closing candle, we're back above the weekly 50 EMA. So just like SPY, there is going to be the possibility we need to pull back and test that level as support before we can go any higher. That level will be right around 14,500, and our 20 simple moving average will be very strong resistance, and that's currently sitting at 15,140. So we have very strong resistance just above, and we should see a retest of the breakout to get confirmation that we're going back into a bull market. The previous all-time high on the weekly chart was up here around 16,570, and if we break out above that level, we could see a brand new all-time high this year or very early next year. So remember, we lost the bull trend, so there's no way we're just going straight back up to all-time highs without a very significant pullback and at least some sort of retest of the breakout. Remember that market structure is going to require higher lows and higher highs, and right now we are still in the process of putting in a high before we get that pullback. So do expect to see a pullback over the next couple of weeks, and then if we can successfully retest the breakout and break out to new highs, we could see a bull market that takes us all the way back up to retest the all-time highs. So don't completely rule out the possibility that there could be a bull market right around the corner. Now, if at any point we come back down and take out this channel low, that will be support right around 14,000. And if we take that level out, you're looking for a retest of the lows. And if we can't hold up above that retest or hold up above the channel support at 14,000, there's still the possibility we are going into a bear market. So you just can't see these last 2 weeks of bullish price action and assume there's no way we can go lower. You still need to watch these very critical support levels and pay attention to the price action. We don't have a bull trend, so don't be getting overly bullish just because we have bullish price action. We still need to get that successful retest for confirmation. On the Dow Jones weekly chart, you can see the Dow Jones is still really just chopping around and going absolutely nowhere, still trading between about 33,000 and 36,000. Right now, the Dow Jones is back above the weekly 50 EMA and getting very close to finding resistance around the 20 simple moving average at 35,000. From here, just like I said on the other indices, we could come back down and retest the 50 EMA, and that level in the Dow Jones is right around 34,164. So remember, the Dow Jones is eventually going to get a breakout to the upside or a breakout to the downside and see a very significant move. So to get things looking a lot more bearish, we need to break back down below 33,250, and to get a lot more bullish, we need to start breaking back above 35,000 and then get that bullish breakout to all-time highs above 36,350. So watch those very critical levels because everything in between is just a trading range and it's ping-ponging around between support and resistance without any real trend in either direction. In the Russell 2000 weekly chart, you can see a little bit of a bear flag look here, and we do have the bear trend, as you can tell by all the moving averages stacked to the bear side. So the Russell 2000 really needs to get a bullish breakout back above 2120 as fast as humanly possible. Without that bullish breakout, it is possible this is just a bear flag before we make that next leg lower, which means the small caps could be coming all the way down to 1700, but that will require a weekly close below 1968. So 1700 is a very real price target on a breakdown below 1968. But we are going to be looking a lot more bullish if the Russell 2000 can close back above 2120. So watch that as a very critical resistance breakout. That's going to be your weekly 50 EMA and your weekly 20 simple moving average, since they are now in the same exact location. Above that level, we could see a bull trend coming back, but we haven't had that bullish breakout just yet, so you still need to respect the very strong downtrend. On the VIX weekly chart, you can see the VIX is very close to closing back down below 20, but we won't have confirmation we're going back into a bull market until we see volatility leaving this market and the VIX continuing to close below 20. So watch that very critical level in the VIX to close below 20, and volatility is right back into this market if we get the VIX back above 24, and the next time we see the VIX back above 30, it should be confirmation we are going into a bear market. I don't expect to see a bear market because we're not in an economic recession, but things can change very quickly and you never know what's right around the corner. So if you want to pay attention to the VIX, you're looking for critical levels at 20, 24, and then 30. As long as the VIX is trending down towards 20 and we start to get consecutive closes below that level, the bull market scenario is going to be the highest probability chance. If the VIX cannot close below 20, it's still very possible we're entering a bear market and we have more downside coming. On the Bitcoin weekly chart, you can see that Bitcoin is starting to look a lot more bullish lately with that successful bounce off support at 37,000 and so far breaking back above the weekly 50 EMA with that close back above 43,000. So right now, Bitcoin will be looking very bullish on a breakout above 45,000, and we're very likely going to see retest of the $50,000 range right around 51,000 to 55,000. Now, if Bitcoin can't hold up above the weekly 50 EMA and starts breaking back down below about 43,000, we are very likely retesting 37,000, and if that level fails, you're coming all the way back down to 30,000. So 37,000 is by far the most critical support zone, and the breakout level will be a break above 45,000, which will give us price targets that take us all the way up to 51 to 55,000. So Bitcoin doesn't have a bull trend for that matter, so you can't be getting overly bullish. So wait for the bullish confirmation breakout in the price action, or just stay bullish above 43 to 41,000. On the ARKK ETF, you can see we're closing this week just above the weekly 5 EMA, but you still see this is an extremely strong bear market with very strong downtrends, and we still haven't had price action closing back above $70. So there's no reason to expect ARKK to go back into a bull market until we see bullish price action, which we just haven't seen. The last weekly high we need to break above is right around $73, and we can't even get back above $70. So even though the indices are starting to get bullish price action, we just don't see it in this ETF. From here, we could come back down to retest support at $55 or come back down and make a new low and hit support at $50. Until we get that bullish breakout above 70 and 73, you should be expecting more downside because this is a very strong downtrend. So jumping back over the S&P 500, you can definitely see very bullish price action over these last couple of weeks, even though I do think we're due for a pullback to retest the breakouts and get confirmation we are going to a bull market. If you're looking at the weekly charts, you can see we are slamming into resistance, so it would be very healthy for the market structure to come back down, retest support, make a higher low, and then bounce and take out the highs. So watch the critical levels and understand that we are still in a macro level bull market because these last 2 weeks of price action coming off of strong support have confirmed that we have just enough bullish impulse and price action to send us right back into another bull trend. So right now in the short term, I'm leaning very bullish, but we still need to get confirmation of that successful retest of the breakout, and we need to see a sustainable bull rally. Remember that I do daily analysis Monday through Friday, so we'll see it happening on the daily charts before we ever see it happening on the weekly charts. So remember, this is a macro level view and not something you just want to take this information with and go try to day trade. This is big picture, swing trading / investing, and right now we are seeing some bullish indications, but we have no confirmation just yet. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. So if you're interested in learning more or how to subscribe to Bank Trade Alerts, you can find out all of the information by clicking on the link in the description below. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.